Hey investors, welcome to Joe's Investment Express, the runaway train of investing. Commodities are running hot. My goodness, I got to talk more about that in a minute. Tesla's bumping up against supply. Some of the semiconductors are coming to life. Some of the biotechs are showing a lot of strength. The market is really starting to perk up, and I thought we were going to have a follow-through day. Not quite. However, I'd like to show you about 50 charts, but I only have time for, let's see, about 5, maybe 6. But what I want to say, most importantly, I think we are in the midst of the early innings of one of the most spectacular energy stock runs in history. You know, supply was already really short because when COVID hit, the oil drillers cut way down on exploration and drilling. And now we have the Ukrainian conflict compounding things, and then we have a worker shortage. You put all those together, and it is a perfect storm of oil and gas demand and shortage of supply, which is really bad for us humans. We humans, but on the flip side, these stocks are suddenly really running hot, and we got to take advantage of it. So let's talk about that. Tesla, a few other ones. Let me just remind you, though, that this is not investment advice. This is just for education. This is just for entertainment. I'm not a financial advisor. I have been investing, though, for 25 years and practicing the dark art of technical analysis. So what I'm showing here is the an energy spider, an energy ETF. This is XLE. And if you do nothing else, if you don't want to play the individual energy stocks, you might consider, see how it's making a bit of a channel here? You might consider just averaging into this ETF in the next week or two. That might be a way to play it. Relative strength is 97. So last year it only had a combined EPS of 30. 2020, and then 2021 it jumped up to 52. I think it'll be even higher this year. Yield is 3.2. So let's talk about Tesla like we always do, and then let's cover a couple other stocks. So I'm going to sound like a broken record here. Tesla is bumping up against supply. There's a ton of overhead supply at 900, and we can clear that supply by space and space, either space to the left or space above, meaning we want that supply to move as far to the left as possible. Like this supply over here, this is not going to affect anything. Or we want to get above supply at, I think it's 944, if I remember. Now, I know a lot of you guys are FOMOing in thinking, I got to get in before the 2 gigafactories open. But let me tell you, everyone and their grandma knows that these gigafactories are slowly ramping up, and I don't think the opening's going to be a surprise to anyone. And I might offer a counter argument that, and I hope this doesn't happen, but it might, that the investors with the deep pockets sell the good news that it's been running up for the past few days with the market improvement and with the knowledge that the gigafactories are going to open. And when we get an opening announcement, they might sell off a little bit. So if you're long term, just keep holding. But if you're a swing trader, really, you are really close to 900, this would be a good spot to book some or all of your profits. Me personally, myself, I'm going to wait for a pullback, or I'm going to wait for it to get above this supply. Now, we talked about Brigham Minerals, MNRL, a day or two ago, and this thing has broken out so nicely. I bought it right down here. This was the cheat. Here's your low cheat, I suppose, or maybe right here. And here's your cheat handle. And now or your cheat, that's not a handle. And now we've had a breakout and an extension now all summer long. Well, summer. For the past year, breakouts have been failing. They've been squatting intraday. But this, the energy stocks have been extending, and I could show you a bunch of charts, but I don't have time. But trust me, they are extending. And so I guess myself, I'm doing quite well on this trade so far. I'm going to take partial profits, half profits soon, and move my stop to my purchase price. Look at this beautiful volume. So that's one that's extended. Let me give you two that are right at buy points that I hope will do something similar. This is SM Energy, and as you can see, it's right up here near its all-time highs, and triple-digit revenue, triple-digit EPS, pathetically tiny yield. I don't know why that's smaller than most energy stocks. EPS growing, and they're making a ton of money. PE ratio is only 20. Earnings came out a short time ago on the 24th, so we don't need to worry about those. And if we look at the chart more closely on stock charts, this is MarketSmith, by the way. This is where I get all my fundamentals. It's a pretty amazing service. Oil and gas, onshore North America. And here's the chart on stock charts, and as you can see, it's been just breaking out base, breaking out base, breaking out base. Today, technically it broke out, but it really squatted. But based on the change in the climate of the market, I think it's going to follow through in the next day or two. I've been wrong before, but that's what I think. I actually bought it, I think yesterday. I'd have to check my notes right in here. And this is I guess kind of a pullback buy, and then I did an add-on today, and I set my stop down here at 31. So let's see if this thing can extend like the other energy stocks. Here's one more actionable chart, and here is MarketSmith. Again, we see relative strength is 98, outperforming 98% of the stocks in the market, and earnings came out just a short time ago, and the stock is reacting positively. Triple digit sales. I almost said triple digit, but double digit, 66% earnings increase. Yield, dividend yield of 2%. That's better. And the yearly EPS keeps getting better and better. These oil companies are making tons of money right now. I'm telling you guys, this is the place to be. So here, that's SM. What happened to NOG? Okay, there it is. Looking somewhat similar to SM. This base is a little deep. Let's measure it real quick. Just a second. Let's get our percentage change tool. 34%. That's deeper. Really, you want to see like 25%, albeit the market has been lousy. And this is kind of a laggard. The early energy stocks like Devon broke out and are looking, they have a stronger, more consistent chart. But I just think that all of these oil stocks are going to break out together, and I think this one is going to run. So I bought it a couple days ago again when it cleared resistance at 25.5. I'll do an add-on when it clears the lip at 27.0001 or something like that. And I'll put probably just a de facto 10% stop on that. Right now I have my stop, I think at like 22. I'll have to raise my stop up a little bit if that happens. And let me just wrap it up with Amphastar. Oh, and I do have just one thing, one other thing I want to say. But I want to wrap it up with Amphastar Pharmaceuticals. Wow, pharmaceuticals. Is that how you spell that? That doesn't seem right. Injectable inhalation and intranasal products. I think this is going to be a big winner. I could be wrong. It actually already has been. It's gone to 18 to 30. But the numbers are excellent. Revenue is getting stronger. 207% EPS last quarter. Earnings are coming fairly soon. We should check on that, but it's not in the next few days. I know that. Let me check on that. Hold on. PE ratio is only 25. Well, I just checked on the earnings, and I do not see a press release on it yet, so it must be a fair ways away. All right, so here we see the AMP chart, 5-year chart. So look, it's been basing for ages. 5 years it's been messing around, sliding sideways, and it broke out with a vengeance finally, and I got shaken out. I bought this little pullback buy here, and I got shaken out on this crazy day at the end of January, and I've been trying to get back in. I wanted it to come back down to the 21-day. I missed this 21-day exponential average. But here we see it pulled back to the 8-day exponential, almost touched the 21-day, and now it bounced back strongly. So I bought a little bit here, like 27.5. Stop is down here at like 26.6. And I'm just going to see if I can build a position. Now this is unorthodox. This is really pretty extended. It has not pulled back properly. I just put in a small position, and I'm just fine with getting stopped out. Obviously I would not enjoy that, but I'm just fine with it. I just am worried that this thing is going to explode and not offer an entry point for a long time, so I wanted to get in early. If I get stopped out and it touches up on the 21-day or even the 50-day, I'll just get back in. It's fine. And here's my final three thoughts. First, if you're getting something out of this video, consider liking it. That helps get the video out to more people. And I guess subscribe if you want. Okay, I'm going to put out a video almost every day, and hopefully the videos will be helpful to you. The other two things I wanted to tell you: Costco earnings are tomorrow. Aftermarket, this is one great long-term hold. It's been one of my long-term holds. This is a company you might consider holding for years if it holds up. I mean, nothing's a forever hold, but let's look and see. I'm interested in seeing how the stock reacts to earnings tomorrow. Let me say that. And then let me just reiterate, I love Tesla the company. I love Tesla the stock. I am concerned that there's been so much build up to the Gigafactory opening that it might be a news event and might take us down a little bit. So just be ready for a sell-off on that news. It seems like when we get a gap up is when it's a surprise, when we get surprise numbers. This is not a surprise to anyone, even my grandma. Even, what am I trying to say? Everybody knows the Gigafactories are about to open. So let's just be careful buying right beneath supply and right before the Gigafactories open. At least put your stops in. Okay, everybody, let me know. I'd love reading your comments. And take care. I'm hoping for another good day in the market tomorrow. We'll see.